Capital Property Fund is a property unit trust which owns a diverse property of prime properties and decentralised office buildings. The fund is a collective investment scheme in property and has been listed on the JSE since June 1984. Capital Property Fund has a market cap of 15 billion rand and a price earnings of 9. Now, are we moving down the spectrum when it comes to these property funds?
Be very careful about saying down, not in quality, but maybe in market cap.
So this one, you are now saying, has got a good value proposition.
This one is that I'm very comfortable to back the jockey at this point in time. They've delivered, almost on average double-digit growth over the last 5 years. A superb management team.
Paul, have you had a chance to drill down into Capital Property
This
Fund?
is the old paying-born property. That's why it's been around a long time. I don't really know anything about Des de Beer. His name's been around, and he certainly appears to be a sharp operator.
Is he robust, Des de Beer?
Let's take a step backwards. The CEO is not Des de Beer. He is effectively at the helm of the whole group, which is Resilience, Fortress, and Capital Properties, as well as NEPI. But the guy who runs this is a guy by the name of Barry Stuller. Very much an accountant down the line. He's very focused. This is not retail property. This is all commercial and mainly industrial properties, and he really saves every single cent. I remember speaking to him, and he goes down to the amounts or how many rolls of toilet paper are being used in the bathrooms. It's really, he cuts costs, and he's been able to do that time and time again. He is the guy that you want backing or running with us.
He may be able to cut costs, but can he strive for that growth? Can he achieve the growth that you need?
Let's say property, we're not looking for 30-40% growth. You're looking for 6-7%, and you can gear that to 10%. In the short term, they're coming off a little bit of a high. So the office market, let's be very frank, is under pressure. So you'll probably get 5-6% in the next 12 months. But subsequent to that, we look for a kicker. They're actually in the market now. They've bought the Raceway, and they've bought another plot of land. Another plot of land in the Durban area, effectively land banking to a certain degree, and they're going to put through developments there. And I believe with that, they can reach 10% into the 2013 financial year.
Excuse my ignorance, but why so excited about Raceway? What is it?
Raceway effectively is going to be a big industrial development, prime place, by all the main arterial roads. It is
in Durban?
No. Raceway is in Joburg. They're bidding for another piece of land in the KZN region, but at the moment they've acquired Raceway, and there's a lot of potential for bulk for development where they can really get some alpha, some kickers into their fund.
Paul, let's get your sentiments.
What I want to know about is the SA Corporate acquisition, because SA Corporate is the old Marriott properties out of the Durban, family interest, Grindrod and those chaps, and they then got subsumed by one means or another into the old Mutual stable. And we've heard in recent days that the guys from Capital Props are looking at an SA Corporate kind of deal. So what's that all about, and how are you reading that?
And is it going to go ahead?
I think this one is probably a little bit more likely at the moment, we think, than the redefined Fountainhead. They've released a sense, yes, they have a firm intention to take out all the underlying properties and capital, and just the differential in property management skills from the current incumbent SA Corporate compared to the likes of Barry Stuller and Des de Beer in the Capital and Resilience stable. We believe not only is it a lot cheaper and they can probably just extract value or upside accretion from just buying it, but they are able to unwind, we think, a lot of fat out of this portfolio. So if they get it at the right price, this is not a 6-7% growth story into 2013. It could very likely be higher.
But you sound as though this one is almost a sure bet, or is that too strong a wording?
Funny enough, when we say a sure bet, it's all up to Old Mutual at the end of the day. They own the management company, and if the price is right for them, it will go ahead. But again, we believe that these guys can really extract value. So they can probably pay a little bit more for the management company and still extract value. We don't want them to pay too much because we're quite overweight in capital, and we don't want to pay too much for something where I think shareholders at SA Corporate should just be privileged that you've got a management team like that willing to look after their assets.
Paul, you've got another probing question at hand.
Well, I'm wondering why it is. In the old days, they used to buy properties. So they would go around and they would find buildings where private individuals or a group of smaller trusts and other parties had put up some buildings. They would buy them, as I was describing earlier. It seems as though there are none of those things available anymore, so now they just buy each other. Now, it's fine. They are, as you said earlier, a 15 billion rand corporation. SA Corporate is 7. Old Mutual probably don't know what they're doing. That's how it works. So, Capital Props can move in there. I mean, it keeps rolling on. The bigger you are, the more attractive you are to global investors. It sort of seems to make sense But again, you can't carry on buying everybody forever, because sooner or later there won't be anybody left to buy.
Capital Property Fund, answer that and then tell me whether it's hot or not.
Okay, just on the back of that, and funny enough, I've been fortunate enough to speak to Barry Stuller and Des de Beer this morning, and what they said is this is the first down cycle which they just can't buy anything. Despite the fact that fundamentally properties are under pressure, people are chasing yield. It's a global phenomenon, sorry. And we can really go, and guys are chasing yields. Look at the UK, look at the US, you got 3-4% bond yields across the spectrum. In Japan, it's really close to nothing. They're pushing their money into the South African bond markets because you get the carry, and they're
So what does
further
that
pushing
translate
it.
to, hot or not?
Hot.
Hot or not?
I prefer the other one. I don't really know enough about these guys to give them the
The answer
go-ahead.
is not hot at this stage.